Oh, hello, Maverick Traders. I know you're super excited. It's tax time. I know that you were all just waiting for 2019 so you could go back and do your taxes. All right, well, I'm being a little facetious here, but actually, I'm talking about you. Me, I really like taxes. And let me just first start off this saying that I did not used to like taxes. I, like everyone else, thought it was dumb and a waste of time and just a nuisance. And when I started trading back in the 90s, understand that this was a brand new thing that you could do. You could not trade the markets as an individual until the internet came along. Like you just couldn't do it. So when you tried to find out how do you do taxes for a trader, nobody knew. Nobody knew. And so I was forced to go learn a lot. I talked to a lot of people, tried to figure it out. And frankly, at the time, they were trying to figure it out too. So I had no intention and no desire to learn as much as I have about taxes. And frankly, a lot of it wasn't all that enjoyable. So I'm very, very happy to teach this session because I feel like it's a little bit of a payoff for all of the worthless, I shouldn't say worthless, it's very worthwhile, all of the boring, monotonous tax stuff that I've learned over the years. I love that I get to share that so you don't really have to go out and do as much legwork. And so through it all, I've actually found that I like taxes. And I remember when my daughter turned 18 a couple years ago, I was so excited. I'm like, are you ready to do your taxes this year? She's like, Dad, why are you excited about this? What's wrong with you? And then I realized, okay, I'm a nerd. I am officially a loser. But here's also something I have found out. If any of you have teenagers, you can't not be a loser. Like, I try to say the things that I said to my kids that they laughed about just a couple years ago is now the lamest thing ever. And I end up being put on Twitter, listen to what my dad said. And I follow them on Twitter and I'm like, hey, I can read that, but they don't care. Okay, so let's get into taxes. So the reason I love to teach this session is that I usually get quite a bit of emails in the first quarter of every year about taxes. So I do this session to try to cover pretty much anything that people are going to have a question about so they can have some clarity on where to go. So we're going to cover how to do taxes as an individual. We're going to cover how to do taxes as a corporation, as an LLC. We're going to cover how to do taxes as an independent contractor for Maverick. So basically, what we talk about today, there's going to be something in there for everybody. Now, for some of you, it might just be one thing. If you only do it one way, then you might have, you do your taxes as an individual. For some of you, it may be a couple. We're going to be talking about trading in general. Now, again, we're going to be talking about FX trading, of course, but we're also going to be talking about other trading you do. Our best traders, they trade everything. They trade options, they trade futures, they trade Forex. Basically, they're just traders in general. And so I wanted to cover not just Forex, but I also wanted to cover everything that people trade. Just again, so it's clear. And really, I love this session because a lot of times when people are new to this, they realize, okay, well, I have some work to do for next year to get ready because it's going to become a lot better when you do things in advance. All right, so let's start off with the most confusing thing. All right. Let's talk about the most confusing thing. So we're going to be talking about things in here. We're going to be talking about forms. We're going to talk about IRS Form 988, ISS Form 1256, Form 4797. Look, I know all of a sudden, whenever I talk like that, my wife's eyes just glaze over. I can tell she's no longer listening to me. I say things like IRS Form 1256, and she checks out immediately. She's like, nope, I'm not going to do this. So look, I know I bored you, but let me just give you a quick overview of it. So tax treatment of foreign exchange. So what you trade is going to basically be determine what kind of income it is. Now look, in the end, it's all income. If you made a buck, you owe taxes on a buck. I mean, in the end, income is income. But some income is treated differently. So let's start off with stock trading. If you're a stock trader, you would actually put your stock trades on form 4797. This is where, again, if you're an active trader, this is where you put your stock trades. We'll get into all this in a little bit. But when you are a foreign exchange trader, you actually can choose which one. You can choose. You can choose form 988. Now, basically, this is kind of like stock trading, meaning you bought it here, you sold it here, you bought it here, sold it here. It's pretty straightforward. Well, for Forex and futures, you can elect to put your income on form 1256. Now, I am not going to get into this all that deeply because I don't really even understand it myself. But basically, whenever you're dealing in futures specifically, Forex as well has been deemed to be part of this. Form 1256 says, yes, you made some now, but you might make some later, you might lose some later. So what they've done is they've given you the ability to pay 60% of your income as long-term capital gains and 40% as short-term capital gains. This is a big deal. Now, this is an election, meaning you have to choose it. This is the default. This is the default, form 988. So if you just say, if you go on TurboTax and you say I've traded foreign currency, it's going to default it to form 988. You want to elect form 1256. You just get lower tax and better tax treatment. So we're going to get into all this stuff when we get into it a little bit more depth. But in the end, what I really want you to understand is, yes, every bit of income needs to be put in a bucket. And I love to use that term bucket. The IRS loves their buckets. How much did you make here? How much did you make in this bucket? How much did you make in this bucket? And also expenses. Okay, well, you spent money. How much did you spend on utilities? How much did you spend on consulting? How much did you spend on this? So everything goes into buckets. But in the end, how much revenue did you have minus how many expenses you have equals your taxes. Equals what you have to pay tax on, your income tax. All right, so let's jump into exactly that. Paying your tax. There are 3 ways to file taxes as a trader, and we're going to cover all 3 here. The first is an individual. Second is a corporation. The third is a contractor. All right, here is the rule, and this is a very easy rule. Whoever name and tax ID number is on the account, they have to include it in their tax return. All right, very simple. So if you have, let's say you had a TD Ameritrade account that you made some trades in 2018. Well, if it's in your name and with your Social Security number in it, that's going to go on your tax return. I hope everyone here has watched the video Trading as a Corporation. Trading as a corporation, we have everyone at least look at that video. We talk about why this is something you should do. Again, I'm going to try to make this more about doing taxes and not you should set up a corporation to trade under, because we already have that session. I make a very hard sell of why you want to do it. But again, it's whoever tax ID number is on. So if you had a corporate account at TD Ameritrade or a corporate account at Forex.com, and it had the tax ID number on it, the corporation is going to have to file those tax returns. They're going to have to claim that income. And then also contractor or trader. Again, this is where some people, when they start trading with Maverick, they give us their individual name. So again, when we sign the contract with them, we have a W-9, and you basically say, this is who I want you to pay taxes to. If you gave us you and your Social Security number, we will issue you a 1099 at the end of the year to that number. If you have a corporation and you entered the agreement as your corporation, we will send it to the corporate's tax ID number. So this is a quick little reminder for any of you who want the income to go to your corporation or LLC, but you turned in a W-9 with your name on it. We, by law, have to file our 1099s by the end of January. So please let us know by the end of January, and we can make those changes and pay you out to your corporation. So what we're going to do here in this session, we're going to go through, okay, if you have income as an individual, this is how you do it. If you have income with a corporation, this is how you do it. And if you have income as a contractor, this is how you do it. We're also going to be covering if you have losses as an individual, how do you handle it? If you have losses as a corporation, how do you handle it? When you have losses as a contractor, how do you handle it? We're going to be talking about both to make sure that everyone has a good understanding. All right, let's first talk about filing as an individual. All right, so again, this is where you have an account. You have an account somewhere with your tax ID number on it, and you made some trades. All right, there's going to be two places that you can file this income. Now, Schedule D is where 99% of your income is going to go as far as a trader. We're going to talk about the differences. We talk about the differences quite a bit in the Trading as a Corporation video. But Schedule D is simply capital gains and losses. And most of investment gains and losses go here. So you must report all realized gains and pay taxes on all realized gains. You're not allowed to have any deductions outside of basically commissions. You can deduct commissions and that's about it. Now here is what I believe and what I think is the worst tax law in America. It's horrible. You are only allowed to deduct $3,000 if you took a loss. Now I remember finding out about this in 2000. If you remember, in 1999, we had the dot-com craze. The markets went crazy. The internet was brand new. Online trading was very, very popular. Everyone was going out and doing this on their own. And in 1999, the NASDAQ went up 68% for the year. So there were a lot of people that made a lot of money because they just bought dot-com stocks. However, they found out, again, so let's say in 1999, someone made $100,000 just buying and holding dot-com stocks, and then they sold them. So in 1999, they had to pay tax on all 100,000. And then in 2000, when the market crashed and all the dot-coms crashed, let's say they lost 150,000. So they lost all their gains and then some of their capital. They found out that the next year they could only deduct $3,000. Now they could take $3,000 losses for pretty much the rest of their life, but they found out that, wait, I've got to pay tax on all the gains, but you're not going to let me deduct any of the losses outside of $3,000? And yeah, that is the truth. That's how it works. So Schedule D is not great. Also, what you need to do with Schedule D is you have to report every single individual trade that you make. You have to report when you bought it, how much you bought it for, when you sold it, how much you sold it for, and your gain or loss. Schedule C is what's considered business income. So again, someone who's self-employed would have business income. Now what happened was in 2000, when people had lost all their money and they found out this $3,000 maximum yearly loss limit rule, they said, no, in 2000 I was trading as a business. Now as a business, you're able to have unlimited yearly losses. So what they tried to say is, hey, no, in 2000 I was trading as a business and I should be able to deduct all 150,000 of my losses. Well, this case went to court and the IRS won. And there are some now pretty strict rules about who can be a Schedule C trader. There's very, very clear guidelines. So again, we talk about all this in the Trading as a Corporation video, so let me just quickly go through this. If you want to be a Schedule C trader, these are your requirements. You must seek profit from daily short-term moves, substantial activity. Now, I've read a couple places, the IRS hasn't given numbers, but I've read they want to see 1,000 plus trades for the year. That's 40 a day. Sorry, not 40 a day, that's 4 a day. That is pretty substantial activity. They want business-like records. They want to see you spending money on the business like it is a business. Also, you need to mark-to-market election. Mark-to-market accounting, we're going to talk about that here in a little bit, is just what I talked about earlier, how, again, if you own a store, and you sell shirts, you don't have to tell the IRS every single time you buy and sell an individual shirt. You just give them the gross amount. That's what companies, corporations, and businesses get to do. But as an individual, you would have to report every single shirt. Again, Schedule D income, you have to have every single one. You don't get to have what's called a wash sale. If you bought and sold the same thing within 30 days, they're going to disallow it. So, again, there's a lot of negatives. It's much easier just to set up a corporation than to be a Schedule C trader. So let's go through how it's all going to work as an individual. All right, so you have your trading account. And let's say in your trading account you made $20,000. So let's say that was your profit this year. Now it's pretty easy because your account was basically in your own name. And as you don't really fit into Schedule C, this is all going to be Schedule D income. So it's going to go on to Schedule D. Now the very first page of your tax return, called the 1040, it basically asks you to list your income. And again, as I talked about the buckets, they're going to say how much money did you make last year in W-2 income. So if you had a job, this is where you're going to put your money. How much did you make in 1099 income? They're going to have a place there. They're going to ask you how much did you make in Schedule D income. So again, if let's say you made $50,000 at a job and you made $20,000 trading, your $20,000 would go right here, Schedule D, and then you at the bottom of your first page of your 1040 form. And sorry, I got to break in. Canadians, your process works the same way. Like when I say the term IRS, just think CRA. I know that they're a little bit different terms, but it's really going to be the same thing. At the bottom of that form is called your adjusted gross income. This is what you have. This is your taxable income. Right, so your taxable income, you'd add it up, would be $70,000. That's what you would owe taxes on that income. So again, let's say that you lost $10,000. Now again, if this is under your own name, remember the IRS or the CRA is not going to let you deduct all $10,000. They're going to allow you to put minus $3,000 on this line. And your adjusted gross income would be $47,000. Again, that's basically how it works. It's pretty simple. It's going to go into your Schedule D. What's your income? What's your loss? That flows through to the first page. And then they add it all up to get your adjusted gross income. Really pretty simple. Pretty simple. All right. Let's get into a little bit more complex. All right. So let's talk about corporations. So again, at Maverick, like I said, we have a video, a live session sometimes where we talk about trading as a business. The biggest thing about trading as a business is that it allows you to have expenses. This is just such a huge deal. Huge deal. All right, so again, remember we talked about Schedule D, Schedule C. To be a Schedule C trader is very difficult. You have to show the IRS, hey, I'm doing this as a business. If you open up a corporation LLC, it's very cheap to do this. It doesn't take a lot of time. You are automatically showing the IRS or the CRA your intent to trade as a business because it is a business. So any income is treated as business income. So again, if you made $20,000 in your trading account, there you go. That is business income. Now the great thing about this is that they allow you to deduct expenses. So yes, you made $20,000, but let's say that you had $15,000 in deductions. Now I'm not going to go through all the possible things you can deduct. We talk about that in great depth in the Trading as a Corporation video, but things like your cell phone that you're going to trade off of, things like your cable or your internet connection, your TV that you watch, your computers, anything you do, your membership fees, your any softwares that you purchase. If you are not corporate incorporated, they're not going to allow you to deduct any of that. If you are incorporated, you can, and so yes, you made $20,000, but you had $15,000 expenses. you actually only have $5,000 of taxable income. That's it. You're able to reduce your taxable income. You still made $20,000. That's in your account. But you're able to reduce your tax burden. Now let's talk about taxes at this point, because again, the corporation made the money. This was in the corporation's account under the corporation's tax ID number. Now, who pays the taxes on that $5,000? It now is determined by what kind of corporation it is. Now, if it's a C corporation or a Canadian corporation, work like C corporations, the business pays this. So again, if you were a C corporation or Canadian corporation, your business would owe tax on $5,000 worth of income. Most of our traders use S corporations or LLCs. They work much, much better. And so what the rule is that the shareholders pay the taxes. So if there is one shareholder in the S corporation, which is you, the corporation would give you a K-1 for $5,000 on it. If it was you and a partner or you and a spouse, and you owned the business 50-50, well, you would get a K-1 for $2,500, and your partner would get a K-1 for $2,500. So again, with the LLC, the members pay it. It's basically the same thing as the shareholders. They're going to get a K-1, and they owe taxes on it. So let's go through the flow of this. Make sure everyone gets it. So remember, this was in a corporate account, not you. It was in your corporation. You are the shareholders. The corporation makes $20,000 in trading profits. It has $15,000 of expenses. One of the expenses we talk about is every corporation must have an annual meeting. And the expenses of that annual meeting are a deductible expense. So if you are cold up there in Canada or cold here in the US, go somewhere warm for your annual meeting and write it off. Right, so in this example here, $20,000 of income from the corporation. Now again, the corporation has to file its own tax return. And on that own tax return, it says that we have $5,000 of taxable income. However, let's pretend this is an S Corp or an LLC. They say we're going to give a K-1 to you for a total of $5,000. So on your personal tax return, remember the front page of your 1040, it lists your income. It says, please list your income sources. Again, you had a W-2 job. Let's say you had a job from where you made $50,000. Then it's going to ask, how much did you make on a K-1? And you're going to simply put in what it says on the K-1 form. So this trader would have $55,000 in adjusted gross income. Now here is just the coolest thing about this. And again, I love this because people always ask me, Rob, do you write off anything on your personal taxes? And I said, no, I always take the standard deduction. Why? Because look, I've already taken all my deductions. Look at this. When I donate to charity, I donate it through my company. When I do anything, I do it through my company. So I get the write-offs here, and then by the time I have my personal tax return, I don't really have any write-offs personally, so I get to take the standard deduction. Now, if you're not familiar with this, the first page of your tax return is your income. The second page of your tax form is your deductions. The IRS allows you to take deductions. They either allow you to take your itemized deductions or what's called your standard deduction. Now, itemized deductions, the IRS says these are the things that you can write off as an individual. Now, you can't take both of those deductions. You can either take the itemized deduction or the standard deduction. They let you take whatever one is biggest. So if you're writing off everything through your corporation, you're basically getting your itemized deductions, and then you're getting your standard deduction in the end. It's beautiful. Again, I'm turning this into a you should trade as a corporation video. I don't want that. Look, this is about taxes, but it's a no-brainer. It's just a no-brainer. You're in the business. You're already putting money to work. You're already spending money. You're already making some money. Like you're already in the business. You may as well get the tax benefits for it. So again, it always flows to your own personal tax return. So again, you're going to enter your K1 income on the line. Now let's say that this trading corporation made $10,000 and had $15,000 of expenses. So the corporation ended up having a loss of $5,000. So it would give you a K1 with negative $5,000. So when you went to your personal tax returns, you went to the front page and they said, how much did you make on your K1? You would put in minus $5,000. All of a sudden, this turns into a $45,000 adjusted gross income. So here's a cool thing. This, you actually made $10,000 trading. But you just took things that you're already going to spend, make them as business deductions, and you just created less tax bill. And guess what? You've already paid tax on the W-2 income. You're going to get a refund. You're going to get a refund. You have $10,000 more in your trading account, and you get a tax refund. Again, makes a lot of sense. Yes, it's a little bit more work, but look, it's not all that much more work. It's absolutely worth it. So again, hopefully everyone understands the flow. If you have a trading corporation, your trading corporation fills out their own tax returns, gives you a K1. You simply put that K1 in your own personal tax return. All right, and last, let's cover filing as a contractor. All right. One thing I want to make sure that everybody understands. When you're trading live for the firm, you are trading the firm's capital, and you are trading the capital in one of the firm's accounts. So on that account is the firm's name, Maverick's name is on that account, and Maverick's tax ID number is on the account. Remember what I said in the beginning of the session. Whoever name and tax ID number is on the account is responsible for filing and paying the taxes. Your name is not on that account. You are a contractor. We're saying, hey, we would like you to manage this account for us and make us money, and we're going to let you we're going to pay you 70 to 80% of whatever you generate for us. So you're simply a contractor here. We do all the taxes. We do all the reporting. It's really nice and easy. It's very, very nice and easy for our traders. So in the end, we simply issue them a 1099. Now, a 1099 is considered contractor payments. So when you work for someone else, but you're not an employee, you are a contractor, and you're going to be paid 1099 income. Now, here's the great thing about 1099 income. It is considered self-employed income. Self-employed income goes on to Schedule C on your personal tax return. So let's say a trader made $20,000 trading as a contractor. They're going to be issued a 1099 at the end of the year. Now again, the 1099, it tells our traders how much we pay them, and it also tells the IRS how much we paid our traders. So yes, we're not just telling you, we're telling the IRS, hey, this person made $20,000 in this job. This is Schedule C income. It's automatically Schedule C. Now remember, Schedule C income, you get to take deductions off of that. That's awesome. So I actually have the question every now and then where a trader says, Rob, if I'm only trading with Maverick and I'm not doing any of my own trading in my own accounts, does it make sense for me to open up a corporation? And I have to answer, not really. No. Because you're going to be Schedule C income anyway. You're going to be able to take expenses off of that. It's not really going to help you all that much to have a corporation. Now, the second that trader starts to trade money outside of the firm, the answer would be no, open up a corporation and do it that way. But here's the great thing. You get to take all the deductions. So again, let's say you had $15,000 worth of deductions. You had that annual meeting, not an annual trip. It's an annual meeting that you had to have down in Florida, California, Hawaii, wherever it was. And you ended up with $15,000 worth of deductions. So again, on the front page of your tax form, they're going to say, how much did you make in Schedule C income? And it's going to be Schedule C. And again, you're going to put $5,000. Again, Schedule C is you're going to list your income, you're going to minus your deductions off of it, and then it's going to say this is how much you need to put in the line for Schedule C. So again, it's really slick. It's really awesome because when you trade for Maverick, we do all the tax reporting, we do all the work. We just simply send you a 1099 at the end of the year. All right, so let's make sure, again, everyone understands the flow. You are a contractor. The firm, you are trading a sub-account of the firm. The firm's tax ID number is on this. So we are going to send you a 1099 with your income. And then that 1099 income is going to go on your personal account. Now let's talk about, there's two ways to do it. If you filled out your W-9 when you become a contractor and actually trade for us live, we send you an employment contract and we send you a W-9. And if you put your own personal information on that W-9, we're going to issue the 1099 to you. You can also put your corporation's information in there. And then we would issue a 1099 to your corporation. Again, it really doesn't matter which way it goes because both of those are going to be able to take deductions and it's going to flow onto your personal one. So again, it's very, very simple here. Very, very simple with the with trading as a contractor. Basically send you the 1099 and that's about it. All right, great question. I have a question here. Can you take 1099 income that's sent in your name and put it into a corporation? The answer is yes. So let's say that I had a corporation that was called Robb's Consulting, LLC. And I did some consulting for someone, but they paid me to my own personal name. I can absolutely take that income. So let's say someone paid me $10,000, but they paid it to me in a 1099. I can absolutely say, no, this income should go into my LLC. Absolutely. The IRS absolutely allows you to take 1099 income in your own personal name and basically put it into a corporation or LLC. That is no problem whatsoever. Not whatsoever. All right, great question. All right, let's talk about, again, we've been talking about years that you have a loss. Let's talk about a loss on this one. So let's say that, again, this trader traded for Maverick, but again, in their sub-account, they did not generate a gain. So they did not. So let's say they started out with a $10,000 trading account, and let's say they ended the year at $9,500. Right now, here is the limitations of what we can do. We can only issue a 1099 to a trader that was profitable. Now think about it. A 1099 says we paid a trader this much for their services. And if a trader didn't get a distribution that year, we cannot by law issue a 1099. We don't have any tax documents that we can issue to any of our traders who didn't have a profit. Now that being said, that doesn't mean that they can't still write things off. They can absolutely still write things off because, again, the IRS says if you're in business, they understand that not every business makes money every year. So it doesn't really matter. You can still take all your expenses. You can still create a loss in that business. Again, that loss transfers over to your form on the 1040. Now, again, let's talk about the expenses. And this is, again, one of the major questions I get is that the expenses that you have in business, they go into buckets or categories. And again, so when you have expenses that you pay for in business, you basically have to decide what bucket they go into. Again, the IRS has basically made these buckets for you. They'll have one called utilities. So again, if you are writing off your internet connection, your cell phone, that's going to go into utilities. So if you spent, $1,500 on all those things, well, in your tax forms, they'll say how much did this business or how much did you as a business spend on utilities? You'd put in $1,500. So it's pretty easy. They just have to decide what bucket it goes in. One of the most common questions I get is, what about my risk deposit? I came in with a $2,000 risk deposit. I need to expense that out. How do I expense that out? Most of the traders I've seen either expense it out as consulting or as a bad debt. That's one of the buckets that people use. I personally don't understand the bad debt one, but I think consulting makes much more sense. So again, you just have to decide where does that deduction go, what bucket does it go in. And then in the end, that's going to flow through to your own 1040, and you're going to have a loss on that line. Whatever your loss was, that's going to be your loss, and you can reduce your other tax burden from that. All right, now hopefully everyone had a lot of fun. Wasn't that just so much fun? But let me give you a little bit of more guidance of where to go and kind of wrap things up. The big question is, were you an individual, were you a corporation? And again, it all depends on what tax ID number was on your accounts or on your forms. Trader tax status, again, it's very difficult to get under your own name. One of the reasons we really tell our traders, look, watch this video on trading as a corporation. We show the benefits of it. Because then you don't have to fit this trader tax status. You automatically get market-to-market accounting, and it's fantastic. If you're trading with Maverick, 1099 income is awesome. It is super easy. You put it down on your Schedule C. You take your deductions off it. It's super easy. Now, I'm going to point you to what I believe is the best source for trader taxes. As I told you earlier, when I first started out in this business back in 1997, nobody knew how to do trader taxes. Nobody, because it wasn't a thing. It just wasn't a thing. Over the years, people have decided, okay, this is how we should do it, and the IRS has said, okay, we're okay with you doing it that way. And now there actually is a standard for how you should do your taxes as a trader. Now, I'm going to point you to a company, Green Trader Tax, run by a gentleman named Bob Green. Now, Bob Green, in my opinion, is the absolute authority on taxes. I know we use him as a consultant. He is a guest speaker at every single trading expo talking about these things. If you go onto his website, there is some fantastic information on there. Now look, Green Trader Tax is a business. They will absolutely do your taxes for you. Now look, they are absolutely the best in the business, and usually the best in the business, they cost the most. But again, if you have a complex tax situation, I could not recommend Green Trader Tax more. We also have a relationship with Traders Accounting. So tradersaccounting.com. They're a fantastic firm, but they don't have a lot of information on their website. And I'm just pointing you to where you can go find information. Information on Green Trader Tax. I think it's greencompany.com, but just Google Green Trader Tax. The information on Bob's website is absolutely fantastic. And I know even after all these years I went on and read, I'm like, wow, I've never had anyone explain it to me this well. Traders Accounting, they're a fantastic firm. They are very familiar with Maverick Trading. If you want to get in touch with them, they absolutely will help you out with taxes. But again, they're businesses, so again, they're going to have fees and costs. You just have to decide if that's worth it. All right, thank you very, very much for joining me, everyone. Take care, and happy tax day. Happy taxes, everyone. All right, goodbye.